Welcome, everyone. Thanks for being here. We appreciate the opportunity to talk to you. Anybody can give a forecast, but we need to be able to justify that forecast and show why you made it. So I'd like today to be a learning process as well as a revelatory process. In other words, to show my thoughts. So I'm going to run through my forecasts, which were given in late 2023 for the year 2024, and build from that and show you some of my logic. So you should be seeing my first line. Let me bring that up on the screen here. Just one moment, please. Okay, so can you see that gold higher? So we predicted in late 2023 that gold would go higher and make a new all-time high. That has happened. And I'll just give you some background on this. The cycle in gold is still bullish as far as I'm concerned. So I expect continued strength in gold, up another $33 today. And there's much more higher to go. So that is my forecast for gold. I'm not going to give specific price levels, which is not what I do. I give time as opposed to price. So gold is still bullish. Excuse me. In addition to that, I indicated that silver was up and would hit long-term target, which it has done. There's no change in expectations. Silver is still bullish. Predicted new all-time highs in S&P, and what I'd like to do is show you how I did that so you can replicate that process. There's nothing secret or arcane about it. It's a very specific, simple process that anybody can do. S&P still higher. NASDAQ likewise, so I don't believe this bull market in stocks is over as yet. I think it has considerably higher to go, which I think will surprise many people. The next forecast I indicated was bullish was cocoa. Now, I don't know how many of you trade cocoa or even look at cocoa, but this has been truly an unbelievable parabolic move in cocoa, the likes of which have never been seen before, and it's not over yet. In addition to that, we predicted the US dollar up, but would top by late 2024 to early 2025, and that is happening now, which means the currencies against the dollar will go higher. I indicated that AI growth would continue and it would outpace society and the legal system to the extent that fake would become real. And that is certainly something that countries and governments and individuals all over the world are struggling with now. So this move AI is just beginning, and it's going to get much, much worse in terms of legal issues and so forth. Geopolitics. I indicated confrontation, violence, deterioration, polarization, and extremities. Why? Because we live in a very polarized society in which the gap between the haves and the have-nots gets bigger all the time. So be careful of that. Geopolitics is going to be the undoing of many a country and many a society. And that is, I think, my biggest concern about the future. I indicated that interest rates would come down. I will show you the cycle that indicates that, and I still believe that interest rates will come down regardless of what happens in the underlying economy. I indicated coffee was bottoming, and we certainly had a huge record move in coffee. And now, for this year, sugar should be bottoming as well. And remember, my work is primarily in commodities, but I do pretty good in stocks as well. We indicated that grains and soybeans, and this is going to be my big forecast. Watch grains and soybeans. They're forming significant lows. I indicated to watch corn, and corn has been one of the only bull markets in the commodity section, and it has been moving very strongly, slowly and steadily. I will show you the chart shortly. Palladium, a long-term low is due in palladium. The accumulation of massive long positions by commercials in palladium market has been record-breaking. I've never seen anything like this before. And what it suggests is that palladium prices will be explosive in 2025, and I would not be surprised if palladium prices doubled from where they are now. And that's just a wild prediction. I'll show you my logic shortly. So I'm showing my forecasts first, then I'm going to show you some of the logic. Platinum, I'm indicating to accumulate for the long term. The move in platinum has not started yet. Copper, I predict new all-time highs in copper for the long term and recommend strongly buying and holding copper shares, copper mining stocks. I indicated that real estate in the United States was topping. That top is still developing and will move lower. It's hard to say what these fires in California will look like in terms of the supply and demand, but it certainly will increase demand. Supply is very limited. Indicated that a low in natural gas was due by late 2024. That low has been made. I have insufficient history on lithium, so I couldn't make a forecast there. I will show the Bitcoin cycle that I use. And by the way, in terms of cycles, my cycle's work is nowhere near as sophisticated as what's done by Lars and Dr. Smith. Their work is superb, working with a cycle finder. My work is visual, very simple, but I think you will see it's very effective as well. And I gave more forecasts. Let's take a look at something else. I have two charts for you to look at. The chart on top is the predicted move. The chart on the bottom is what actually happened. How could they be so close? What is the similarity and difference between these charts? The top chart indicates all of the weekly S&P moves since 1960. So we're talking about a large amount of data. We took each year and indexed it so that the high of the year in the S&P was 100 and the low of each year was 0. So we actually ended up with what I call the true DNA of the market. Then we took 2024, which is showing on the bottom, and compared 2024, which was not part of the database for the top chart, and looked at the two together. It's uncanny how similar they are. Certainly not perfect, but the actual and the predicted are very close together. Why does that happen? Because the seasonality is very strong. It's a major factor. It's a major cyclical force in the markets and tends to repeat very similarly almost every year. So we can take that forecast and use it in our work together. What I'd like to do is show you, I'm going to switch screens here for a moment. Oh, one moment, please. So here is my work on Bitcoin. A moment, please. Okay, so here's the Bitcoin, the cycle that I've been using, and indicated that by May of this year, we will see, if we have a symmetrical cycle, which is not necessarily true, we should see the top in Bitcoin, and certainly that cycle has been right. What I'd like to do is switch screens to my actual charts and show you them one by one and explain why my forecast is what it is. So just bear with me for a moment. I'm going to stop my share and start a new one. Just hang in there, please. And let's go to a new share. And if you do have questions, type them in the chat and we'll deal with them as best we can. What I have here is a cycle chart of corn. Can everyone see that chart?
Yes, all clear, Jake.
Thank you very much. So let me explain this chart. On the top of the chart, we've got price. In the middle of the chart, we have commitment of traders report, commercials. At the bottom of the chart, we have small trader sentiment. I'd like you to look at some correlations. When the commitment of traders commercials index is green, it means that commercials, the largest traders in the world, who account for over 90% of futures activity, are net long. Notice the correlation. The commercial is long, the market goes up. Commercial is long, the market goes up, and so forth, even for the small moves. Please take a look at the commercial activity right now. Commercials have been buying corn since February, March of 2023, and even all the way up to right over here, which is August, September of 2024, commercials have been buying corn. Why would they be buying corn? Very simple reason. They need the product. At the same time, the small trader sentiment shown at the bottom of the screen was very negative. In other words, over 80% of the small traders have been negative on corn prices. Look at the juxtaposition. The small trader is negative, while the big trader, the professional who knows what they're doing, is very bullish, more bullish than they've been in a long time. And when we add to the cycle, let me see if I can do that. One moment, please. So here is my cycle on corn. Let me make it a little bit clearer for you, like so. So here is the bigger cycle right over here, and the smaller cycle within it. Please take a look at what's happening. Ideally, the cyclical low is not due to come until right over here, which would be a double cycle, and that would be sometime in August of this year. However, notice that commercials continue their buying in advance of that. This is normal commercial activity. So therefore, you've already seen a large move up in corn prices. I forecast for you that once we are past the midpoint, the ideal bottoming of the cycle, corn prices could become explosive. And the reason I say that is commercial activity is related to the length of the buying. This is the longest stretch of buying that we've seen by commercials in a long time. I realize trading corn has very little sex appeal, but as a futures trader, it means a lot because this move that's already happened in corn, contrary to what's happened in the other markets, has been very large dollar-wise because of the margin. So that's the corn situation. I predict a big bull market in corn, most likely weather-related. Let's look at another one. Here's another one. Soybeans. I'd like you to look at what's happening in soybeans. Again, here is that massive accumulation of long positions by soybean traders. And these are not just traders, they're professionals. They're people who use this stuff, who broker this stuff. And look at the juxtaposition. The smaller cycle is on its way up. The commercial has been buying, and the small trader has been negative. This is the ideal combination. So I predict for you a big bull market in corn and soybeans. And let me show you another one that very few people will recognize, but I'm going to show it to you anyway. And that is this one right over here. Let's look at the chart first. Notice this massive accumulation by long positions, commercials, and this huge move up. And look what's happening now. Let me bring the cycle onto this if I can. A moment, please. This is a cycle which is late, and here it is. And what is this? This is canola, otherwise known as rapeseed, but it is canola now, traded in Winnipeg, Canada. And I predict for you a big move to the upside. So let's watch it carefully. And remember, canola and soybean oil are related to each other in terms of end use. Let's look at soybean oil. One moment, please. So I'd rather do it this way than have the charts already made for you with the cycles, because I want you to see how I arrive at this process. So what do we see here in soybean oil? Again, commercials accumulate long positions before the big move up. And you can see what happened right over here. I'm going to mark it for you. Commercials started buying before the bottom and participated in this move. One moment, please. Participated in this move, which even though it may look small to you, is actually a very big move. And again, notice the soybeans, the commercials are a leading indicator of what's going to happen. Let's look at another one. British pound versus the US dollar. This is indeed one of the best cycles I've ever seen. Let's make sure I've got it correct. Yes, we do. And let's put it on the quarterly chart. And let's take a look. Although this cycle is not perfect, it has run approximately 8 years from low to low, all the way back to the 1950s. But what's most important to me is this. Look at commercial activity. Who are the commercials in British pound and currencies? Banks, insurance companies, other financial institutions, sovereign wealth funds, and so forth. But look at this. we have this big spike right over here of professional buying, while the small trader is neutral to negative. So I predict for you, pound sterling will gain strongly against the US dollar in 2025. In addition to that, I'm going to show you another one. New Zealand dollar. Let me show you what's happening here. Go to the monthly chart. This is a very perfect cycle. And again, I want you to look at the spike. Look at the combination. The cyclical low is due. The commercial trader is very long this market. And the small trader is very negative this market. We have the perfect combination for a big bull market in Aussie dollar versus US dollar and New Zealand dollar versus the US dollar. Very important cycle. Please pay attention to it. Let me show you yet another one. Let's take a look at gold. In terms of the cycle, here it is. Let's go to a quarterly chart. And here's the chart. Now you will notice a number of things. In fact, let me erase 1.40 first. Let's take a look. This is the lowest point on the chart in market sentiment right over here. In other words, more than 90% of the small traders were, and more than 80% of the small traders were negative on the market. Let me show you what happened. Let's go back to it right over here. One moment, please. So look what happened. At a cyclical low, with negative small trader sentiment, preceded this big bull market right over here. And the small trader sentiment continued again, be very low in advance of the bottom of the cycle. So this is where we now find ourselves, and these charts are up to date. We now find ourselves again, if the cycle were perfectly symmetrical, the top would be sometime in the next few months, but it is unlikely to happen. There are no indications of a top whatsoever. Now let's talk about commercials. The last time commercials were positive on gold was all the way back here in the late 1990s. What does that mean? It means they had sufficient supply over here, but they had insufficient supply over here. So it's a question of supply and demand, because commercial traders use the futures market for the purpose which it was intended, which is as a buy hedge or a sell hedge. So let me show you something utterly fascinating. Watch this. S&P. Here we go. Let's take a look. In fact, let's do it this way. One moment, please. Let's look. This big bull market that we're in right now, which is nowhere near over, was preceded by several years of massive accumulation of long positions by commercials. And let me stop for a moment and explain this to you more clearly. What does this really mean? It does not mean that every commercial is long the market. It simply means more contracts are held on the long side than on the short side. And the extent or length of holding or accumulation is proportional to the size of the bull or bear market that follows. So you can see over here, accumulation in advance of this move up. Over here, over here, and over here. In every case, this is a very strong combination of winning methodology. So this massive accumulation of long positions preceded the big bull market, which may lead to the question, so what's happening now in Bitcoin? I want to show you something utterly fascinating. Although I'm not a Bitcoin trader myself and have serious doubts about the viability of the market, I want to show you something. Look, what do you see? Massive, oh, the wrong chart. Let me change the chart for a moment, please, since I don't use candlestick charts. So here, what do we have? First of all, the cycle has established itself, at least on my work, very clearly. But I want you to look over here. At this low right over here, which was a cyclical low, we have the combination again. Small trader, very negative. Cycle bottoming and commercial activity on the long side. Where is that commercial activity right now? Again, commercial activity is still on the long side. What accounts for this commercial activity? I want you to think about the fundamentals. In the last several years, we've had numerous Bitcoin and cryptocurrency funds form and trade as stocks or as ETFs or as proxies. The money that's coming into those funds to money managers has to be allocated into the market. Therefore, money managers have had no choice but to buy Bitcoin. That poses at one and the same time seriously, potentially big liquidation bear market. And number two, a great opportunity for Bitcoin to go higher. So I predict that sometime by mid-2025, crypto and many other currencies, in particular Bitcoin, will top and have a resounding decline to long-term support, which is right now in the 6,000 area, 60,000 area. So watch for a crash in Bitcoin sometime in the first half of this year. I will be more specific as the time approaches. I'm not predicting that a crash is imminent. I'm simply saying that the combination of the cyclical high and the forced buying is a very dangerous combination, and the small trader is becoming a little bit too bullish. We're looking for the small trader to become 90% bullish. That has not happened yet, so there's no danger at this point in time, but we do recommend caution. Let me show you another one. And again, I realize that different traders have different expectations in different markets they trade. So if I show you a market that's not your favorite, well, I'm so sorry about that. One moment, please. Here we go. I'm an equal opportunity trader. I'll trade anything that moves. So let's take a look at this market. Again, the relationship here between commercial activity on the long side and price forecasting is undeniable. The relationship between extreme lows in sentiment and extreme market bottoms is undeniable. So this is not a fiction. It's not a Fibonacci number. It's an actual fact that has been repeated over and over again many times over the years. In fact, look at this one right over here. So if I get a little bit excited and my voice begins to quiver, it's because I love this so much. So what is this market? Let's see if we can put a cycle on it. One moment, please. Here we go. And this, believe it or not, is the quote-unquote lean hog market. In other words, pork. Look what's happening. The major cyclical bottom came right over here. It was a double cycle low because there's three harmonics within the big cycle. And we had this participation by commercial traders on the long side, a very bullish formation. Keep your eye on it. It's bound to be continuing to be explosive, as was the live cattle market. Let me bring that up on the screen. And then we'll move on to the financial instruments. One moment, please. Let's go to the quarterly chart. So there it is. So the difference, and again, what I'd like to do is show you the difference. The difference between the hog market that I just showed you and the cattle market is this. There is no significant commercial buying activity here, which does not mean an imminent bear market. It simply means the continuation of a bull market, but not with great reliability. In addition to that, I want to show you this right over here. This was one of the highest readings in small trader sentiment we've ever seen. Notice what has happened over here at the cyclic high. Let me mark it for you. One moment, please. And this one right over here. And these all prove to be significant turning points in the market. We go. and this low right over here, which preceded this cyclical low right over here. I want to show one more, and then I'll take questions. Here we go. So what do we have here? Please take a look. This is long-term interest rates, Treasury bond futures. Notice what's happening. Number one, commercials have been buying futures all the way down, which is normal behavior for them. The small trader at this juncture is very negative. So remember, there's an inverse relationship. In other words, when futures go down, interest rates are going up. When futures begin to turn higher, interest rates go down. The small trader is very negative. They expect higher interest rates. We know that when a small trader expects something to happen, it usually does not. So I look for lower interest rates across the board. We'll see how that turns out. I do have a few other things I'd like to show you, so I'm going to ask the foundation if I can make a video and have it available to all attendees and all members of the foundation, so you can see some of my other forecasts. Right now, I think I've covered most of them, and we'll see what happens with that. I want to show one more and then take some questions because I have another commitment in just a few minutes. Let's do this. Let's look at this one right over here. Japanese yen has had one of the most predictable cycles I've ever seen. It's approximately 7 to 8 years long. And here's the chart. This is a thing of great beauty. So what do we have the combination? Let's look. Number one, 7 to 8 year cyclical low due right now. In fact, it's overdue. The commercial trader is heavily long, and the small trader is heavily negative. Expectation, big bull market likely in the Japanese yen. So I am glad to take some questions now, and whatever I didn't cover here, I will cover in a video if the foundation will make it available to members.
Thank you, Jake.
Thank you, Ron.
Sparking up lots of questions as per usual from year to year, especially with the market calls as we intersect into this transition time of trend change and cycle timing. Our opening question, Jake, is from Mark, and it's about the new series that you've been part of on a weekly basis now. And last week, the question on the 8 open close moving average, will you be doing one on a Thursday short video with the 10-8 high-low moving average? So it's a technical question.
Yes, yes, I will be doing that as well. Absolutely.
Great. And the second question from Paul, more on your cycle application, part theory, part practice. What's your view on static cycles versus dynamic? Which do you prefer? And it's the observation that you typically use static.
It is the nature of time and price to change, so cycles really should be dynamic. I've done very well with static cycles because I'm looking at a period of time going back maybe no more than 100 years. So they would be virtually unchangeable over that period of time. But if given the opportunity with a good forecasting tool or a cyclical analysis tool like the foundation has, I would much prefer dynamic cycles.
Thank you, Jake. And then a question from George. What is your forecast for wheat?
Wheat will move with the other grains. It's a very bullish market. It has not bottomed yet, but it's getting very close. And I think the mere force of soybeans and corn moving higher will move the wheat market as well.
And then our follow-up question from Keith. Thoughts on energy? That actually is also echoed by Bill, who had an observation on the spread on Brent. But Keith's question is, with which particular regard to the question's on energy, but it's driven by two different people that shared their view. One on energy spreads, another on macro thematics. But simply put, what's your view on energy and the tradable markets?
Here's my chart for crude oil. I just put it on the screen.
Thank
And we
you.
have a time window right now for a major low in crude oil prices, which is no surprise that the market has been moving higher in the last few days. So it is a bull market and it's just beginning. That could very well be due to supply demand, could be due to geopolitics. I don't know, but it is a very important cycle. The one thing that's missing here is commercial buying activity, which means there is no supply situation. There's no shortage in terms of supply. Therefore, it's going to be a demand market as opposed to supply or geopolitical market. So I want to thank everyone for attending. I will make that video, and Ron, if the foundation can make that available, that would be very helpful.
Wonderful. There have been some questions on the link for these presentations and yours especially.
Thank you very much. I'm sorry to leave a little bit early, but I have another commitment. I hope that what I've shown has been clear. And remember, we use three things together: the cycle, small trader sentiment, and commercial activity. None of those, some of those will not be present in every juncture, but the combination is a winning combination, and it showed a few markets today that have that combination right now.
Thank you so much, Jake, for a fantastic presentation with market forecasts for people to follow in the year ahead. All the best with your next event.
Thank you very much, and I appreciate the opportunity and all your hard work, Ron, and
Thank you very
everybody.
much. Lots of positive feedback from our audience today.
Well, that's a good thing. Thank you so much.
And more questions. I'll try and shoot them your way, Jake, if possible.
Wonderful.